Hey guys and girls, welcome to this week's episode of the OBS and Birchy podcast. I'm your host, Nathan Birch. It's the show unraveling the truth to the facade of the 21st century. We're now ex the Matrix and waking up to motherfucking reality. Reality? It is. Interest rates, right? Interest rates have been talking about these things for years and years and years, prognosticating different things that we'll see in the market and things that happen and some things that don't happen and then they happen 6 months or 12 months later. And here we are with rate cuts. We've got rate cuts in the news. We've got political stuff in the news. We've got all this information flying around, what is actually happening, what to expect with rate cuts, and how do all these numbers stack up, and what does it mean for you as an investor in real terms? So the first thing I ask is, if you guys watch Facebook Live, right, every second Tuesday, I do a Facebook Live, 7 o'clock on a Tuesday night, Sydney time, on Facebook Live, doing talks about different topics, but also talk a lot about the news, the media, and what's being publicized out there about various different topics. 80% of the time, those topics revolve around currency, recessions, monetary policy, what's happening with rates and whatnot. So if you're not up to speed, maybe head over to Facebook.com/B.Invested.com.au and watch some of those videos, because there's a lot of content there that you guys that just listen to the podcast may never ever see. So yeah, we've, what is going to be the outcome from the rate cuts? What is it going to look like? The hype versus reality. So I guess the first one, the rates have dropped a couple of weeks ago. It's been about 3-4 weeks now since the rates have dropped. What is happening out there in the market? I was talking to Tom Panos, the auctioneer. He was in our office the other day and we're chatting to him, and he's talking about the auctions that he's doing. He's now seeing him go from like 7 out of 11 that go to auction sell to now 10 out of 10, 9 out of 10. There's a lot more auctions that are selling at auction because people are feeling more confident. They're like, well, the unknown of the fear that, hey, interest rates are going to keep going up held people back. There'd be people out there thinking, I'm going to see what happens. They could be putting the rates up, right? They listen to the news, right? And just think about it this way. If you watch the news, they always say, right, every time there's been a rate cut, they're like, oh, we think we're going to put the rate up next time. We think the next movement's going to be up. These guys know exactly what the fuck's going on, right? They're not just sitting there. They're not amateurs, right? Sitting around at a bar going, oh, maybe the interest rates will go up. We'll see what we'll do next month, right? These guys know exactly the triggers that are causing monetary policy to move left or move right. It isn't just, hey, interest rates are going to fix people for their houses or whatever. They don't care about your house, right? It's having bigger impacts with our currency, the value of our currency, our dollar, the strength of our country. If our dollar goes down, that means that everything we import, which we import everything, goes up in value. So inflation will run through the roof if we don't plan it right. So there's lots of intricate parts to the back end. And if the RBA will never sit there and say, oh yeah, we're going to cut it 10 times, just wait, we've got more coming, right? Because everyone will just be stupid throwing around cash, right? But if you go back through history, and I might even get my editor to drop in here a chart pack of interest rates over every cycle, and I'll walk through what it looks like. I don't even have it here in front of me, but I'll walk through it because I know it is etched into my mind like a burnt screen, right? It's very clear. Every time that we've seen a rate cycle of rates going up, it takes, 12, 24, 36 months for the rates to go up. And then it falls in a much sharper, deeper level than it ever went up. And every time that we have a rate cut cycle, they come to a new lower low, right? And we're down at 10 basis points beforehand. So I'm excited to see what comes from this rate cycle, because we've already got inflation. We can't control that. We're already seeing property prices rise, right? Like if we go and do a fly around the country, at Townsville, right? A year ago, places were selling for 150 grand. Now they're selling for 300 grand. We're looking at Perth. They were selling for 150 grand. Now they're selling for 450K, right? These markets have already gone up, right? I'm not saying go buy them because you'd be silly. You're buying at the top, right? We've already bought everything there, right? But, the markets have gone up in a high interest rate environment. So imagine what's going to happen to it when rates start dropping. So yeah, just looking at facts and fiction and all that, don't trust the news. They said it only takes 2 weeks to flatten the curve. You were forced in your house for 2 years and, we all know the rest of the story. They said interest rates would go up in February of 2019. I said that they'll come down within 90 to 120 days. On the 4th of June 2019 was our first rate cut. Everyone was like, how did that happen? I was looking at the monetary policy and, what's the outcome going to come from there? So I'm not going to speculate on things and go down to that. That's what I do on Facebook. So go watch those videos over there. What's happening out there in the market? There's a lot of people that were sitting on the sideline that couldn't buy a property, right? They still can't, right? But they can't today. But when they drop the interest rates over the next 6 months by another 0.25%, 0.5%, 0.25%, 1%, whatever, and the rates come down, it means that their servicing goes up. So people will be able to now service for money as the rate cycle is now in a decline, rates are coming backwards. That means that people's servicing will be going up so people can afford to borrow more. That means that there'll be more people coming into the market and more people will be able to spend more money, which will in turn mean that those prices will be affected moving forward in a positive territory. So just something to be mindful out there. Rental market, I haven't seen anything on that front at the moment. Ordinarily, I would say when a rate cut cycle comes down, when interest rates come down, rents sort of plateau because a lot of people go from renting a property because they couldn't afford it to buying a property, which causes more buyers and less stock, which causes prices to rise, and the rental market can sometimes get a bit shaky. However, on this occasion, we have so many migrants coming in the country and so much absorbing of that stock, and they can't build stock at the cheap rates anymore because of inflation, meaning that there's less stock coming in the market to support what's there. I don't see that being an issue, this rate cycle of, rentals being impacted too much. If we look at all the articles that are coming out, if you watch the news, you'll get bipolar because you'll look at the news in the morning and you'll see that, interest rates are going up, and you watch in the afternoon, interest rates are going down. In the morning, it says we're going to have a property crash. In the afternoon, we're going to have a property boom. The next day, we're going to see house prices for the last quarter have doubled, and in the last quarter, they've fallen in half by the afternoon, right? What's in the media is publicized. It's there to get clickbait. It's like the red girl in the Matrix. You turn around and look at it, they'll blow your head off, right? That's what the news is, all clickbait. Yeah. So just be very, very cautious of what's happening out there. I think we're going to see, as we go into election, there's going to be a lot of talk about, because I'm a sleazy bloke, right? He'll be out there saying, oh, look, I've been able to affect the cost of living. We're bringing interest rates down. Let me tell you, right? I'm politically atheist, right? I'd be more aligned to a Liberal than I would be to a Labor, but I'm politically atheist, right? No one's coming to save you. They have no control. If you want to think about who really controls it, look at the central banks. They're the ones that are controlling it, right? They're the ones that are controlling the whole government. Government's just middle management in this Ponzi scheme. So you're going to see a lot of political stuff coming out there and them taking claim, hey, I'm the one that's, done this and I'm the one that's done that. You haven't done anything, right? It's the central banks. There's going to be lots of property experts out there with spin coming out, right? Oh, do this. You're going to start seeing a lot more articles about crazy stories, crazy projections, crazy economists, crazy, it's going to get more wild out there. So be prepared for that. And I think, the fear sells advertising space. So they want you to click on it. They've got to put out marketing. They've got to put out content, right, for people to read. But they make the money from selling advertising revenue. So however sensationalized they can make it, the more they're going to do it for the advertisers. I guess when we look at the lending and the changes that are going to be out there, what does a rate cut mean? I unfortunately don't have my finance team here with me today to run through exactly what changes a 0.25% interest rate would mean. However, naturally it will improve depending let's just use some numbers, right? It's going to make up numbers here. You got $1 million loan. You save 25 basis points, 0.25%. That's $2,500 a year better off on interest rate, right? You got $3 million worth of loan. $3 million worth of loan at 25 basis points would be $7,500 a year. So if you have a $3 million worth of debt in your portfolio, you're now going to be better off by $7,500 a year. Interest rates come down. by 4 times, by 1%, that would mean that you're saving $30,000 a year. If you had an extra $30,000 income attached to your position, how much more could you borrow? You could probably borrow another 200 grand, 300 grand worth of servicing. So it's how does that relate into your lending? Naturally, it's going to make it much better for you to be able to service. And banks will be wanting to do deals. They'll be opening up opportunities for people coming to the bank, new clients. I think that if you're an investor, make sure you're speaking to your mortgage broker or your bank or getting a second opinion, seeing what other options are out there. There's been a lot of people that have been trapped at second and third tier lenders for the last few years because interest rates have gone up and they don't service at a big four bank. Those people will now be able to go back and service at big four banks. So because the interest rates have dropped by 1%, you're saving 30 grand a year. Now you're saving 30 grand a year, you service at this other bank, which when you go and refinance, you could save another 20,000 a year. So just instantly with a bit of a rate cut, it's enabled you to open up the gate to another lender, which has been able to save you the money. So, do speak to your finance team and make sure that they're able to, do something for you. It could be that you could now service to pull out the equity and use that equity to go buy another 5 properties. Right? There's lots of benefits that come from it. So I guess the question that you might be thinking off the back of that is, should you be refinancing now, or should we be waiting a bit, or when is it best? If it was me, I wouldn't race out right immediately because there's more rate cuts coming. It's very obvious that we're in a changing monetary policy. Every country around the world has dropped their rates of recent times. So if we look at those central banks around the world, they're dropping their rates 25%, 25 basis points this month, 25 basis points next month, 0.5%, 50 basis points the following month. So as the next few months, this first half of 2025 is a real exciting time for everybody just to sit there and watch what is happening, but starting to get yourself prepared to be able to get access to better loan products, which is going to be really important. Loan products, as well as pulling out that equity to be able to rebuild the next half of the portfolio. Because as we start seeing the rates drop, more people will naturally come into the market. Prices will naturally rise because of that, because people can spend more money in their budget. And the quicker that happens, the less chance you're going to be buying the properties today, and the more you're going to be paying for the properties in the future. So as an investor, if you're smart, right, you want to be a smart investor, you'd want to be getting the properties while they're on sale still, not when everyone's at the table and you're paying a more inflated value for it. So, yeah. I guess myths about interest rates. Lower the interest rates. What does it do to my property? As I just said, more people come into the market. Some people think that if the interest rates fall, then the rents will fall as well. They're not correlated, right? If anything, they could go the opposite way, just depending. So what I mean by that is, if interest rates drop, there's nothing pegged between interest rates and rents. So just scrap that as a stupid idea. But the only way that it could be is that if people can afford the rents drop, more people go out of their rental property and go, hey, the rent's too high, I'm going to go buy a property. But the property that they'd be most like moving in is the same sort of stock as what they're renting. Investors will see, hey, I can cash out and get money. So they'll sell their property, meaning that there's less and less rental stock in the market. If we look over an average of the last sort of 30 years, there's less and less rental stock going into the market, which will then put more pressure on rents for them to rise. So, that's a myth that I'd like to clarify. People could be looking at it, right? Every time the rates drop, there's generally something bad that happens imminently, right? And we don't know what it is. Last time we had a virus that affected, the whole world. Time before that, we had the GFC. Certain things have happened at the time of rate cutting, right? So they don't just drop rates because everything's doing great. They drop rates because there's a big issue out there. So we haven't been exposed to that issue yet, but over the next 6 to 12 months, 2025 will be that year that we'll see the next crisis of some sort. And people will be sitting there thinking, okay, I'm going to wait for a bit more stability and then I'll get into the market, right? I'll just wait a little bit, right? I just want to take everyone back to 2020, right? Everyone thought, oh, the world's craving in, the crashing. The most exciting time I ever had in my whole career as an investor in my life, right? In my life would have been February 2020, right? The world closing down, people being stupid, like retardedly stupid, running around with chaos. Oh, I better sell. Oh, I had people that was buying properties with and negotiating. I'm like, oh, I'll settle it now, like get in. And the agent's like, oh yeah, I think it's great that you buy before Corona. I'll get my owner to accept it because they're really scared of Corona, right? People selling properties for not half price, but they were selling them for like 20% discounts because they were scared, right? Stupid. But that instability caused opportunity. On the back of that, we saw the properties double and triple, right? But why did we see that occur? Because they dropped interest rates to zero. They printed all this extra money. If you think about it, right, Australia, we have $1 trillion worth of debt. The US has $37 trillion worth of debt. The US is paying $1 trillion every 90 days of interest now, right? Back in the early 2000s, there was like a $5 trillion debt that it took 200 years for the US to create. And now we're paying 20% of that every year, every 3 months as interest, right? What's going to happen is when rates drop to a certain point, the countries are going to pull out bonds, right? They're going to make bonds up. And these bonds will be basically loans at a very long-term, very low interest rate environment. But when they're creating these bonds, they're going to put that money back out in the system, which will create even higher levels of inflation. So people would think here's the myth of the instability, things could go down, I'll just wait out and see. We should have seen the biggest recession anyone could have ever imagined back in 2020, 2021, 2022, but we didn't. In turn, we saw the biggest boom we'd ever seen because they changed monetary policy, they printed all this extra currency, which in turn went into inflation. And that's the whole big part of this story is we're entering into that time. I don't know what's going to be the trigger for this. If I was a betting person, which, I am, I make calls. I am 100% confident, without an error of doubt in my mind, that this is just the start of a change in monetary policy. And we will see this rapidly over the course of the next 6 months. Next rate cut. Each meeting will start seeing more and more rate cuts. They're already talking that there's 4 rate cuts booked in for 2025, but this is using the rate tracker of talking about where the bonds are at, right? But as the bonds start losing their value, that will fall off a cliff much faster, much quicker, much steeper. And I would expect to see, 1-2% off. If we're looking at the end of 2025, no financial advice, I'm just a crazy guy on the internet, I'd be very confident and comfortable with a figure somewhere between 150 to 200 basis points off from the current cash rate of where we're at. So exciting times to be ahead. If you were to see a 2% reduction in your rate, what would that mean to your portfolio currently? What would that mean to the value of your assets? Where would they go to? What would that mean for your cash flow? What would that mean? Like, I know hundreds of investors that I could think of in my head that would be able to retire from this cycle when we start seeing rate cuts. If they just dropped, 2% off their rates, they'd be retired. Yeah. So exciting times to be ahead. Some people are going to be fearful. Some people are going to be looking at this and going, okay, I understand what's happening here. They've been on the merry-go-round a few times. They see what's happening, and they're going to be the winners. So I guess my final point on this is be diligent out there. Be looking at everything with all different angles and all different vantage points. Why are they saying this? How does that stack up? Can this happen? Is this person full of shit? No, they're absolutely full of shit. I look at the stuff that 90% of the media puts out and it's like, hey, there's just glossied up rubbish and they're just talking theories and potentials and whatever, and make educated decisions based upon that. And, you look back in 5 years' time and those that have weak hands will fold and be losers, and the ones that have strong hands will be the ones that are winning in 5 years. So you were given this opportunity 5 years ago when Corona came. You're going to be given a similar opportunity. I don't know what they're going to blame it on. I don't know if it's going to be a war or this or that or the next thing. It's going to be fun. Keep an eye out for it. I'm certainly waiting for them to bring the next episode of the season of what they're going to propaganda us with. but we're definitely in a changing monetary policy, and this is just the start of it. So congratulations for those of you that have held on and accumulated in the tough time, because you'll see some great results over the next little while. So if you need help on your portfolio, if you want to have a finance review about your portfolio and see, can I be getting a better interest rate? Can I be pulling equity out? Can I be with a better bank? Can I borrow for more money? What should I be doing? If you want more finance related discussions to be had, you can call my office 1300-367-925. Email my team at admin@B.Invested.com.au, and we can put you in contact with our team at Zinger Finance. It's by appointment only. So speak to my team. They'll be able to put you in contact with one of our finance strategists and work out, what options you have to take advantage of the markets that we have in front of us at the moment. So, thanks a lot for watching. Have a great day. Remember, subscribe, share with your friends and family, and we'll be back next week, next Thursday, Google Play, Apple Play, Spotify, and YouTube. Thanks for watching. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it.